Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings and sometimes find more drama than a reality television show. Today we are diving deep into the latest report from Dankon Corporation. You might be asking, who is Dankon Corporation? Well, they are an online service that helps people craft congratulatory messages. Think of it as a fancy digital card writer for all your special occasions. But as always, the real story is in the numbers. This is their quarterly report, a 10Q filing with the US Securities and Exchange Commission. It gives us a snapshot of how the company is doing financially over the last 3 months and the current year. We're going to cut through the jargon and figure out what is really going on with Dankon. Let's jump straight into the heart of the matter, the financial statements. First up, the balance sheet. This is like a snapshot of what the company owns and owes at a specific point in time. As of the 30th of November 2025, Dankon reported total assets of about $98,000. Not a massive number, but let's see how it stacks up. Now, the liabilities and stockholders' equity. This is really where things get interesting. Dankon has total liabilities of over $103,000. That is more than their total assets. And then there is the stockholders' equity, which in this case is actually a deficit. They have a negative stockholders' equity of about $4,000. This means that if the company were to sell all its assets today and pay off all its debts, there would be nothing left for the shareholders. And in fact, they would still be short. This is a pretty big red flag for a company. Moving on to the statement of operations, this shows us how much money the company made and lost. For the 3 months ending the 30th of November 2025, Dankon brought in about $20,000 in revenue. That sounds okay, but then we look at their expenses. Their total operating expenses for that same 3-month period were nearly $30,000. This means they spent more on running the business than they brought in. The result is a net loss of over $8,000 for just that quarter. And when we look at the 9-month period, the loss jumps to over $45,000. This company is bleeding money. What is also interesting here is the weighted average number of shares outstanding for the 9-month period. It is over 4 million shares. This is important because it ties into how they calculate their earnings per share. And speaking of earnings per share, it is a loss of $0.01 for the 9-month period. This basically tells us that for every share you own, the company lost a penny. Not exactly a recipe for investor excitement. Now, let's look at how the equity has changed. The statement of changes in stockholders' equity really lays bare the financial situation. It starts with a deficit at the beginning of the period, then they have net losses that dig that deficit deeper. Interestingly, we see significant amounts of common shares issued for cash. For example, in one transaction they issued shares and brought in over $23,000 to additional paid in capital. This is how they're trying to fund their operations. They're selling more ownership in the company. This table shows a balance at the 31st of August 2025 with almost 5 million shares issued. Then they issue more shares later in the period. It is clear they are relying heavily on issuing new stock to keep the lights on. By the 30th of November 2025, their deficit has grown to over $52,000 and their total stockholders' equity is still negative, around negative $4,000. Let's talk about cash flow. This tells us where the money is coming from and going. The company used over $62,000 in operating activities. That means their day-to-day business operations are draining cash. Under investing activities, they spent over $39,000 on intangible assets and over $11,000 on projects in progress. This is money spent on developing their platform, which is good, but it adds to the cash drain. The good news, if you can call it that, is in their financing activities. They received over $71,000 from loans from related parties and over $44,000 from the sale of common stock. This is how they are funding everything, by borrowing money and selling more shares. This resulted in a net cash increase of just over $2,000 for the period. Not a lot considering the losses and expenses. So, what exactly is Dankon Corporation? It was incorporated in November 2024. They aim to be an online service for crafting congratulatory messages, making them meaningful and impactful. It sounds like a nice idea, but is it a viable business? This next note is crucial. It is about going concern. Essentially, it means there is serious doubt about whether the company can continue to operate for the next year. They've generated revenue, yes, but they've also incurred significant losses and have an accumulated deficit. Management plans to keep the company afloat by using their current cash, getting loans from directors, and doing more private stock sales. This is a common strategy for early stage companies, but it highlights their reliance on external funding and the risk of dilution for existing shareholders. They outline their accounting policies here, including how they value intangible assets like the software they're developing. They amortize these assets over 5 years, and for the 9 months ended the 30th of November 2025, they recorded over $8,000 in amortization expenses. It also mentions capitalized costs of over $84,000 for these intangible assets. This is money spent on building their internal use software, which they expect to generate future value. Their revenue recognition policy explains they earn money from API keys that grant access to a certain number of requests. Customers pay for pricing plans, and revenue is recognized over the period the customer has access to the software. They also report they had no accounts receivable outstanding as of the 30th of November 2025, meaning they collect payment upfront or very close to it. This note tells us about their stock. They have 75 million shares authorized, and as of the 30th of November 2025, they had over 5.2 million shares issued and outstanding. They've been issuing a lot of shares, especially for cash, which as we saw is helping fund their operations. This is always a section to watch closely. The CEO and sole director has advanced a significant amount, over $84,000, to the company. This shows a strong personal investment in the company's survival, but also highlights their dependence on insiders for funding. On a more positive note, under commitments and contingencies, they state they were not subject to any legal proceedings. That is a good thing to see. Now let's look at management's own discussion of their financial situation. They are very upfront about the risks. They include a standard disclaimer about forward-looking statements, warning that actual results might be different from what they expect. This is pretty typical for companies trying to protect themselves from lawsuits if things go south. They reiterate their business model, an online platform for generating congratulatory messages. They also mention their website, but we're not going to focus on that. They touch upon government regulation, noting that online platforms are subject to various laws concerning data protection and digital services. They emphasize their commitment to compliance. This is an important but generally boilerplate section for tech companies. Interestingly, as of the 30th of November 2025, they had no employees under formal agreements. The company is essentially run by its president, CEO, treasurer, secretary, director Edgar Ulises Rodriguez Velasquez, and another director. This suggests a very lean operation, possibly relying heavily on founders or contractors. They confirm what we saw in the financials, that they generated revenue but incurred net losses. They break down their operating expenses, listing things like bank charges, amortization, professional fees, marketing, and server lease costs. This section is where they really address the going concern issue again. They admit to operating losses, using cash in operations, and having an accumulated deficit. They explicitly state that additional funding is required. They acknowledge that future funding through equity might dilute existing shareholders. This is a key risk for anyone considering investing. They state they have none to report here, which is common for small companies. This section is about their internal controls. Management states that their disclosure controls and procedures were not effective. This is a significant finding. It means they don't have robust systems in place to ensure that financial information is accurately and timely reported. There were no changes to their internal controls during the period. This isn't surprising given the overall financial picture. The rest of the filing covers standard sections like legal proceedings, risk factors, unregistered sales of equity securities, and exhibits. They state they know of no legal proceedings, which is good. The exhibits include certifications from their CEO and CFO, which is a requirement for these filings. Overall, Dankon Corporation is a very early stage company trying to carve out a niche in the digital greetings market. The story here is one of high risk and potential, but with a clear current reality of burning cash and a negative equity position. They are heavily reliant on external funding, both from loans from insiders and by issuing more stock, which means significant dilution risk for any current or future shareholders. The fact that management itself has stated their disclosure controls are not effective is also a major concern. While the business idea might have merit, the financial health as presented in this report is shaky at best. They are focused on developing their intangible assets, like their software platform, which is a necessary step, but it is a long road from concept to profitability, and they are deep in the red. Their ability to secure future funding and execute their business plan effectively will be paramount to their survival. The company is essentially betting on future growth and funding to overcome its current financial struggles. Alright, that is our breakdown of Dankon Corporation's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.